You will not believe the simple, profitable strategy that I will show you today. It's based on internal bar strength. So let's jump in. I took this idea from Linda Raschke, which is a professional trader. She's been trading for 40 years or so. Very profitable, and she has many really excellent ideas through her podcasts or books or Twitter feed. But anyway, this idea is actually really old. It's from a book published in 1996. Now, of course, I did my own salt and pepper on it to, let's say, renew it or bring new life to the strategy. Hello everyone, my name is Ali Casey, and thank you for joining me on Stat Oasis channel, where we discuss finance, investing, algorithmic trading, and everything else in between. If you are new to this channel, make sure to subscribe, hit the notification bell, so you don't miss any of the great content that I post daily on this channel. Also, it would be amazing if you can smash the like button, share the video with others, as this will help the channel grow, because it will give a vote for Google that this channel is producing good content. Internal bar strength is a great concept, and you should really learn it, as it gives you an insight of the battle that happens between buyers and sellers on every single bar. Here I put some simple illustration. So this bar is an up bar. So this is the open, and we closed here. That means it's up bar, and this is the high and the low. So the range will be between the high and the low. That's the full range, and usually they call this part is the body. So internal bar strength, as its name suggests, it measures the strength of the bar, and it does this by measuring where the close sits between the range. So if you divide the close by the range, you will get a ratio that goes from 0 to 1. It's always going to be from 0 to 1. And the closer it is to 1, that means we closed up in the bar. That means it's a strong close. And of course, if you are close to 0, then that means the close happened somewhere in here. And that means we have a weak bar, because basically the close is so far away from the high. That means the seller have more pressure. Now I added my own thing, which I also measure the open, where I measure the open bar strength. Basically, I am measuring where the open sits in the range. So you divide the open by the range, and you get some value between 0 and 1. But why I did this? Because you can use it in the building blocks. So internal bar strength is a simple concept, but really powerful concept. And if you build the block inside StrategyQuant X or in your trading platforms, then you can use that as a pattern. So just like looking for 2 up closes or 2 down closes or close above moving average, this is just another block that the close is in the top percentile or in the bottom percentile. And you can use that randomly or on purpose. Of course, with a data mining package like StrategyQuant X, then you can use it as just a regular building block. So now I'm gonna build the strategy that Linda Raschke pointed out back in 1996 using the internal bar strength. And I already programmed the custom block inside SQX. So we will just add it here. Let's, so IBS. So I'm using now the open. So this is the IBS open, measuring the open. And we're looking for the open to open in the top percentile. So we'll put 0.8. And the internal bar strength close is in the lower percentile. So 0.2. So what we are looking here is the bar opened high and closed at the lower half, and just means that this is a weak bar. And since this is a mean reversion strategy, so this would work perfect. So here I put the TradeStation engine on ES, of course, our favorite mean reversion tool, and 1 contract, no commission. And then we will exit using the same internal bar strength. So internal bar, and I programmed here greater than level. They are the same thing. So we want to exit when the internal bar strength closes above A. Now, Linda Raschke in her book actually did this strategy as an intraday strategy. So she will take that signal and trade the intraday move, because usually in the ES most of the time there is a tendency to reverse during half of the day. So this is actually good info. You can use it intraday. Most of the time that the ES have an up move and down move, or a down move and up move, and that's it, just two during the day. Most of the time, 20% of the time they will have just one move, either all the way up or all the way down. Now, my twist is, I usually stay away from intraday strategies, so I'm building this as a daily strategy, and I will show you how we will do it. Okay, so let's test the strategy as is. So this is on daily time frame, and since 2008 we have 200 trades, so that's roughly averaging one trade a month. Now the strategy is compounding at 20%, which is really good, and 36% drawdown. So the strategy on its own is really doing well, but if we dig deeper, so for example, if I click here, go to overview, you can see that the drawdown, this is the closed drawdown. But as with all mean reversion strategies, you're holding the price while it's going down. So if I go with the open drawdown, you can see the open drawdown is 72.85%, which is of course unacceptable. So the first thing we can do is, by now you should know this, if you see my videos, you know that this is an excellent filter for the stock indexes. So close greater than 200 SMA. So we reduce the trades by a third almost. The compound annual growth rate goes down to 70, but we're interested in the drawdown, and now we did. So we reduced it from 70 something to under 50%. And because Linda Raschke uses the strategy intraday, as I told you, so she waits for a further pullback to buy on limit order. So the strategy we just built just buys the next day on the open, basically a market order. And Linda advocates to wait for a pullback during the day. This trick is also used very often by Larry Connors. There is only one problem with it. It's going to reduce the number of trades, but it should enhance the quality of the trade. So this is just another trick which you can even wait for a lower than yesterday's low. So this is yesterday's low, and if we decrease it by 1%, we can see, of course, the number of trades even goes down further. But now the closing drawdown is a lot less, but the open drawdown is, just a little bit, a touch less. So, of course, we're losing number of trades. So it's a balance you need to do on your own. So actually, again, this trick is also used by Larry Connors, where instead of waiting, because you're waiting for a pullback in a mean reversion strategy. So instead of entering on market, you enter on the low of yesterday, or you can wait even further, like a 1% lower than yesterday's low to enter, or you can do it on the close. Now I did an optimization, so this is the entry and the exit with net profit. So this is the exit from 0 to 0.6, and then the entry from 0.4 to 1. And we can see that this green area is the stable area. And actually we can do a top view. So if you pick something in here, maybe 0.4 on the exit, and let's say, I don't know, 0.6 on the entry. Of course, all of these are profitable, like you see. And they are actually very consistent. So you can see compound annual growth rate, same thing. And Ulcer Index, again, this square is the best. And drawdown, this is the worst here. But we can see we lose on the number of trades in this section. So as you can see, this is 0.4 and 0.6. So it's right on the edge of starting to lose a lot of trades. Obviously, this one is better, 0.7 and 0.3. But then if you go again to CAGR, you will see 0.7, 0.3, then we don't lose a lot of trades, and also we keep our net profit. So it looks like 0.7 and 0.3 are really good. So if I go back here and let's do 0.7 and 0.3, we should enhance our strategy, and we do a lot. So we reduce the drawdown, we increase the total profit, and we increase the number of trades, and we decrease our open drawdown to 32%. So that is the simple strategy, internal bar strength only. Linda Raschke called this 80-20. Just to summarize, so Linda Raschke uses the internal bar strength to go in intraday at a limit below the yesterday's low, and just a trailing stop to lock in the profits during the day, because most of the time the ES have a reversal during the middle of the day. My twist on this strategy is to make it a daily strategy. Add the 200-day moving average, because that's amazing for the stock indexes for the long side. And we also change the 80-20 to 70-30, as actually all the area are very stable, but we can reduce our open drawdown, because now we're holding overnight actually by more than a half. Of course, if you have any questions or comments, I would love to hear about it. Please do so below the video. And if you want to be part of my inner circle, you can join the Discord server through the Patreon link down below, where I host live question and answers weekly, alongside the tactical asset allocation portfolio signals and the stocks portfolio signals, plus the many free downloads like the blocks you just saw today. They will be available on the server. As always, good luck with your trading, good luck with your investing, stay safe, and I'll see you soon.